Good day, everybody. Good morning if you're out here on the West Coast with me. Good afternoon if you're on the East Coast. Good evening if you're coming in from Europe. My name is Michael Filighera. I am the proprietor, trader, analyst with TradersHelpingTraders.com, LogicalSignals.com. Currently I have a trade room, and I also present a daily update. It's called the Elliott Wave Update, and that's going to be covering the S&P 500 and the NASDAQ 100, both the futures markets. I also have podcasts that I put together where I cover the big picture, and then I'm looking at the SPX, the NDX, all of the treasuries, not all of them, but all of the major treasuries, and gold and silver, and the dollar index. So where I'm going to begin today is something that's very important that I think I want to share, because I realize that I'm not the only one, that here we are in a very, very serious situation here in the United States, which has now spread, and it is more global, and that is the banking crisis. Now, on the backs of Silvergate Capital, Silicon Valley Bank, Key Signature Bank, all being, well, Silvergate Capital, they just closed their doors. Silicon Valley Bank and Key Signature Bank went into receivership. We saw the Fed, the FDIC, and the Treasury go into overdrive to try to contain this. We're all now trying to figure out, how does this affect our whole status, our picture, our everything moving forward? We've now seen the market several times, including today, absolutely just fly and go higher, 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 moving above levels. Like, why would the S&P be driving itself for 4,000 in the face of all of this serious news that we need to deal with? And how I'm going to start this is basically what I feel the reason is. The markets are no longer being controlled or guided by fundamental news or just any other type of news that would affect its status, would affect how it moves. The markets, lock, stock, and barrel, that's all of them, all the equities and the treasuries, are now controlled by derivatives. And what I mean by those derivatives? By options, and how those options trade. Now, if any of you are an option trader, you realize that what's inside of an option is what we call the Greeks. And those Greeks, if you walk all the way through them and have an understanding of them, by example, delta, gamma, theta, vega, rho, they all have a different meaning, and they all have a different effect on your original position. Now, if you understand options at all, and you realize that if you purchase a call option, you're buying the right to purchase from somebody, your seller, 100 shares or 100 of whatever, the underlying. So if you're using Apple, for example, and you buy a March 155 call, then what you're buying is the right to purchase from the dealer or the seller 100 shares of Apple for $155. What is included within that, and I'm just going to flip real quick, because this is important to have an understanding, because this is what is pushing our markets all around. So here we have options that expire tomorrow. Actually, no, take that back. These expire today. So just to take it one step further, options, when they were first designed and came out, expired once a month. So basically the third Friday of every month, we had an options expiration. That has now grown to where we have what they call zero DTE options, which is 0 days to expiration. That's what this is. These basically have been trading for a while, but now it's all today. Everything that's happened, this expires. All of these options expire at 4 o'clock Eastern today. So all of this now put together, and now I want to just add one other thing, that it's the volume within the options, right? So the volume in these 0 DTE options, which are primarily held to the S&P, so both the ES and the SPX and the spiders and whatever else ETF we got going on, the NASDAQ future and the NDX, the treasuries have dailies. So they all start to produce these daily option expirations. They are now encompassing between 40 and 45% of the daily volume in all options. And that, my friends, is huge. So what do we start to see? Let's just take a look at the S&P. Now this, because you can see right there, is tied to the March future. It has 1 day left of life. So the bulk of futures trading has shifted to the June contract, but we still have a whole bunch of options that will settle to whatever this price is. So if we come down and we can start to see we're at 39.60 now. So if we come down here at 39.60, right, you can see 39.60, the offer is $12.50. These expire in 3 hours. So in 3 hours, somebody's willing to pay $12.50 to have the right to purchase the S&P future basis March at 39.60. So what are they really paying? Add that to that. They're paying $372.25. Well, right now, they're just at parity. So that's premium. So what happens? I, as a dealer, say, I'll sell that to you at $12.75. Go buy the underlying, which you can see they flip because the markets are thin. And now you've got what they might call a hedge trade. And in any case, now what we have is we can look at what the Greeks are. Your basic ones are delta. So this number tells us on those options, the 39.60 option, it's 50-50, right? Because it's sitting right there at 39.60 basis the March future. So you have a 50% chance that it's going to close above it or below it. So it's a 50 delta, right? So what the gamma then tells us is that for every dollar move in this underlying, your delta will increase by, it's moving around too fast, by 0.1 or 1 gamma, but that gamma can explode. So it's really, will add very, very quickly. Your theta is the decay in the option price. Well, 39.60, your theta is minus $10.25. Why? Because now it's under. It's under that. So this in price is going to come down pretty dang quick. Your vega has to do with the volatility. And so we have all of these different things and all of these different numbers. And now you may hear different analysts, or even on CNBC or Bloomberg, they start talking about gamma explosions, a gamma squeeze, gamma-geddon. And we also now have it in volatility. So again, what I'm trying to now just fill in here, as we're trying to look at a chart to determine where's this market going to go and how is it going to get there. If I had to rely on fundamental, the news, I'd be looking like, wow, I'd be a seller here for sure. But again, now I'm dealing with, well, we're dealing with an expiration that's going to happen in an hour, or excuse me, in 3 hours, and also another expiration that is going to happen tomorrow. So a lot of what happens today is they're adjusting their positions, both puts and calls, to monetize. So in other words, we have a lot of gamma that comes in play, and this market is going straight up. Gamma explodes in all kinds of directions. And now you need to make adjustments to your positions. And sometimes you got to buy. You stand here and you buy. You have to buy the underlying because your position dictates you to do it. As so, for example, you could have gamma on that's like, as this thing ticks up, your position becomes shorter and shorter and shorter. So what do? You have to buy. You have to buy that underlying. You've got to neutralize your position. And if you don't do it 1-to-1, the gamma will continue to kill you. They'll continue to destroy your position. Now, if you've got the long puts and it's going up and up and up and up, your gamma is going against you. So you may need to do the opposite. You may need to change things. So in other words, you're getting longer and longer and longer. The underlying, because of what's happening within the Greeks. Now, having said all that, putting into perspective that this move has nothing to do. Do we think that what? But again, if we turn to CNBC or one of the other stations that produce financial media, they've probably gone around to talk about, well, they're all real happy about what Janet Yellen was saying as she's out there talking in front of the Senate today. Really? I didn't hear anything really too great or not so great for what she was saying. Or they'll think of another reason. Or they're now convinced the Fed will not raise rates. Now, mind you, overnight, and actually right after our opening, the European Central Bank raised their rate 50 basis points. That's in the face of Credit Suisse being bailed out to the tune of $54 billion by the Swiss central bank. So this bank contagion, right? These problems within our banking system are persistent and they're not over. So we've got one group, and that's the Fed, the FDIC, the protection, the plunge protection team, as they've been called. They now have a new name. There's a new agency that's been set up to help pay off the depositors 100%. So we're not just going to insure you up to $250,000, because Silicon Valley Bank had many, many, many depositors that had 26, 25, $30 million on deposit. We will make good. That's what our FDIC is saying. We will make good on all those deposits, not only there, but also KeyBank and anything else coming up. Guess what that's going to cost? So we're looking at that the federal government somehow is coming up with another $2 trillion. What's that going to do for inflation? What's that going to do for our current situation? Improve it? I doubt it. So why is the market going up? Why is the market running through all the stops, running itself back to 4,000? Now, I'm going to go back over. And I'm going to look at, I'm going to get rid of that. And I'm going to go back to this volume open interest. Let's come down here. What do we got at 4,000? Only 6,000 so far, but they're buying it. And what are they coming in and buying more of? 40.15, 40.25, 40.30. Can the market get up that high? I doubt it, but you'll see what they're going to do is roll it out to here, which is also the next month. It's June. So what expires tomorrow is basis June. Let's take a relook. Oh, it's going up. These all improve. These expire tomorrow, basis June. So a lot of stuff going on. And guess where it's controlled? Again, what I'm talking about, it's controlled by the derivatives, by the options. And that then forces the adjustments here. And this has nothing to do with the banking crisis, with any of the fundamentals. If they did, we should be down here. And I'm not joking. So with that in mind, I've had to readjust my Elliott wave count. Those of you who have heard me before, those of you that may know me, know that I basically have a very long history in using Elliott wave. And I believe Elliott wave, and I trust in Elliott wave. But what I am noticing is that not necessarily my long-term picture, which I can go all the way back out here to my monthly maximum. That's not so much being affected. Obviously, this is all the same, and it is continuing to tell me that we're about ready to fall off a cliff and nosedive. That's what it's still telling me. But the market on the short-term basis, oh my word, no. Not, I mean, I can go down to the daily and we can see how the picture still basically is telling me the same thing, but look at that rally. I mean, even if we're going to look at it at a technical basis, it's popping above all the moving averages, particularly the 4 and the 8, and they're hooking. That's a very positive move on the daily chart for continuation of the upside. Well, what does that do to my count? Well, I've already made the changes. I can bring this back down to that hourly chart. And I know I'm flipping around fast, but I kind of have to. When we continue to count this ongoing move, but what's changing is all this right in here. I was not looking for this move. I was looking for this move to basically hold below here. Now it's broken above and gotten almost to 4,000. This is just an intermittent sell, right? They're selling a little bit here. But we got our hints from the NASDAQ. The NASDAQ just refused to go down, did not go down. They continue to push into individual stocks. So again, before I'm going to label it, it's manipulation, even though truly it's kind of what it is. But when you see them, there are algorithms that know exactly, and there are traders, institutional and retail, that know exactly where to go and what to do to force a short squeeze, to force a market to go up or down. And why? Because all of our indexes, particularly the S&P and the NASDAQ, and also the Dow, are cap weighted. What is the largest capitalized company that we got right now? I still believe it is Apple. But what's the heaviest weighted stock in the NASDAQ and the S&P? Apple. So when you see, and then what's next up, which would be pushing up heavily weighted stock in the NASDAQ, in the S&P, and now we have to include the Dow? Microsoft. You checking out Microsoft today? It came from being down 3 to being up 9. Why? There was a little blurb of news about artificial intelligence, which we know Microsoft just paid $18 billion or put $18 billion into ChatGPT several months back. Well, anything that's going to come in with artificial intelligence, you got to have Microsoft. Got to have it. Well, then we have Meta. Why? And you might think, just in terms of when we're looking at, didn't Meta just announce they're laying off another 10,000 people? Are they now trying to sublease all of this empty office space here in San Francisco where I live? And plus down in Silicon Valley, down in the valley, they have more office space that they could possibly use. Didn't Mark Zuckerberg just basically sell that we've made some mistakes with how we're going to move forward with our virtual reality tools? Didn't he kind of talk about all that? Why would the stock be up trading closer to 200? Well, because now that he said all that, he's looking like, well, Mark, back time you announced earnings, you also announced that you got $40 billion stock buyback. You know where he gets the money to do that, folks? He borrows it. He borrows the money, announces a stock buyback. What happens to the price of the stock? If you remember, go back to that day, it jumped 10, 12, 15%. You want to pump up the price of your stock? That's one way to do it. Do you think they're all jumping in now? I definitely want to get out. So here, I'm going to sell it to you, Mark. Here, take it. But for some reason, and again, just for the exercise, let's go take a look. Now, Meta, their options expire tomorrow. They're in the normal rotation, but it's a very large expiration. It's a quarterly expiration. So it's like what they call, I believe, a quadruple. So we have equity options, futures options, futures. There's a lot of things that kind of start to come off. Let's go down to these 200s. Holy schmoly, 63,670 have traded today on top of the 23,521, which are existing. And they're still willing to pay $202 to have the right to buy the stock at 200. That's what the premium is telling you. So what do we have going on over here? Well, we got a lot of puts, but they're trading. So are they going to believe it? Or are they going to try to knock it down? Or are they just getting out and selling them because they want that premium? So again, we're building a situation. If, excuse me, if Metaverse were to suddenly move strongly south, you're going to have a lot of negative gamma to deal with. And what's that going to do? It's going to force the sell. It's selling on top of selling. So again, derivatives dictating direction. Is there anything underneath all of this fundamentally? Well, let's just see what they say, what the news wants to pin on there, because this is what we, retail, get to find out. A suburban Pennsylvania county is suing Meta, TikTok, and other social media platforms. Oh, all right. Well, that could be perceived as negative. Is it working? Not on a chance. Here's the one. What's going on with Microsoft shares today? I got to go read that so that you can tell me something that everybody else already knows and jumped on board. So don't be the last to the party for anything, folks. You get caught at a top or a bottom. Now, with all of that in mind, I would be more than happy to take a look at anything you would like to. So I open the floor to those, and I will continue just while people are bringing stuff in, hopefully. I'm just going to let's start talking about what I think here for the S&P. Again, purely technical. I'm not taking any fundamentals in. I'm using Elliott Wave. Elliott Wave continues to be an analysis tool that, because I'm using this in a day-to-day basis, and this is an active market, it has to remain fluid. So in other words, a lot of people want to rest on this and go like, well, you said. It's like, no, the market said. And now the market's telling me something very different. So because it's fluid, I can't tell the market what to do. Elliott never even assumes that it can tell any market what it has to do according to this count. And the basis of Elliott Wave, how it really works best, is that it does not take any of the fundamentals into consideration. What it's really based on are human emotional reactions. That's really what it's based on, because our human emotional reactions in a market produce very discernible and recognizable patterns. So if I'm recognizing this pattern, it's corrective. We have this, which was a resumption of the trend, sloppy as it is, because again, we're on a smaller time frame. We did 5 waves down. Then the next one, those are considered an impulse wave. Then we have a 3-wave corrective wave. And that's going to be counted in letters, A, B, C. Now, mind you, impulse wave, only one way to look at it and see it. That's a 1, 2, 3, 4, 5. That's what's consistent inside of an impulse wave. Within a corrective wave, we get about 13 different possibilities of what path the market could take. So that makes it a little bit more difficult from the get-go, because here we have a very clean ABC up. Wow, should I consider that minute wave 2? I did, because I thought, well, it's clean. How clean can you be? And how did it do? We came off. We rejected that level and we sank. And then what did they do? On the close, this was Tuesday. We're not even having to go back, but 2 days. This was expiration. Oh my God. And actually they did it in the last 5 minutes. They ran the S&P, I think it was $30 or $40 in 5 minutes. Why? Talk about the Greeks, talk about the gamma, talk about the delta, because that's what it was. They needed it to be at 39.50. They got it up to 52 to guarantee that they get their expiration where they needed it. Then we pull in and we do this because, okay, so that maybe completed it, maybe it didn't. So I allow for additional high, but then it comes up, doesn't break that high, sinks back down. And I'm like, oh, okay, 1, 2, 3 of my next start of the leg down. What did they do? No, we're just going to go right back. So it's like, okay, so redo. Let's now look for the next wave up. How's it going to come in? And that had to change again today because here we got this and I wasn't looking for it. So this could have been 1, 2. So I had to change it today, right? If I'm counting this as the completion of wave 2, right? If that's 1, this would be 2. I'm starting on my third. What's inside of it? 5 waves. Counted 1, 2, 3, 4, 5. I'm looking for the very beginning. What's inside that first wave? 5 waves. So what I got? 1, 2, 3. What happens today or yesterday? Nope. And then once again, right at the close, bam. We want a higher, we needed a bigger number. They got it. Then we put in the 1. Then today and overnight, okay, looks like we're going to go down. Looks like we're going to go down. Gets down to that, which was just prior to our open. And I think it was on our opening. And then what did they do? Bam, bam. They ran it above that level, 39.50 again, in an attempt to do something totally different. And then they went up and broke that, which takes this all away as being anything other than a continuation of a complex corrective pattern. So now I had to go back and figure it out. It's like, okay, if that's the B, and I'm talking, these are very small degrees. So that's the B. Now we have a C wave. If you understand anything about Elliott, it's all C waves have 5 waves. 1, 2, and that's a third. The other thing I always try to include, if you're doing a study of Elliott, really learn the characteristics and the personalities of these waves, because it's going to help you determine what's really happening. So if we can step outside of the fundamentals, or we can step outside of why are they buying and they're selling, and we just concentrate on what is the wave pattern telling us. Well, if you understand, well, if I'm in a third wave, it's normally the longest and the strongest, no matter where it's coming in. It's just a characteristic of a third wave, the longest and the strongest out of the sequence. All C waves are 5s. So if I'm 1, 2, I got the 3, I've got to go back and look at it. What is the characteristics? The characteristics are that this is what it should do. And Lord, did they do it all the way? And they won't, and they haven't stopped. When you think, okay, maybe they're going to go to this level. I don't want to see them above that. Then they go above it. Well, what's the next level? They're going to go up here to, this is a 200 SMA. Institutional love the simple moving averages. They go up to it. They break it. They trigger more stops, right? So don't forget, folks, as much as you hear this, oh, they can't be happening, there are algorithms and they're purely designed and coded to go on stop hunts. And there are other technical things that you can use now that will tell you where these things are sitting, where resting orders are, where stops might be. And they just take their little algorithms and tune it in and go right to it, trigger the stops, and then do the next trade. So this happens all day long. So it doesn't necessarily fit in. But I'm going to say what we got going on in the S&P right now is a 1, 2, a 3. Look for a small 4. We got another 5, 10 to 1. That by tomorrow, this ends up above 4,000 and likely 425 to 450. That's how hard I think they could push. Now, again, you would think we're back at 4,000 against all of this bad news. When, gee, Michael, weren't you just calling for 38, 37, 36, 3,500? I was, and I still am. It may go up here first, and then I want to hear that somebody tell me, well, that doesn't work. the market's bullish. It's like, that's another thing I stopped doing, folks. I stopped approaching markets with a directional bias as termed in bullish or bearish. There are directional biases right now. It is going up, but not because suddenly the world has turned bullish on S&P companies or on the S&P or on US markets. I doubt that's happening. So what gets spun, what the narrative turns into, what CNBC and everybody else pushes out, oh yeah, great time to buy this. Yeah, move into those banking stocks because they've really been oversold. Okay, might be a good deal, but the bounce might be very temporary. Might not last very long. The whole thing might not last very long because I'm counting a C wave, which will finish a wave 2. And what still comes next is that third wave that I keep talking about. So whether they're just delaying the inevitable, but they're doing it for their own purposes. And not that they're going out there and saying, well, we're going to run it up and then we're going to dump it. Then that will be the result. But they're looking again, and I'll be right with those. I'm sure there are some few things that are coming up, and I'll be right there. They're now looking to tomorrow where they can close out all of their options in Meta, in the individual stocks. They're now looking towards tomorrow in the S&P. They'll finally be able to get rid of this March future at the end of today. Now then their focus will be turning back to the June future, which comes into play tomorrow on the March 17th expiration. But from this point on, right, all the rest of these months that are marked March, well, they still settle into cash, but the pricing is going to be basis the June future. Okay, not to make it any more confusing. And understand calls, the right to purchase the underlying on or before the expiration date, which right now is tomorrow. Puts gives you the right, the holder of the put gives you the right to sell the underlying at the strike price. Right now, 4,000, you got to pay. That's pure premium, right? I mean, what's the value? It does fit if you kind of stick it up there, but there's more premium over here, right? 39.82. Right? Because this tomorrow will be based on that price. 39.82 into 4,000 on the put. It's just got some premium. I'm paying too much because the intrinsic value is that minus, or 4,000 minus that, or even say 30.80. So it's $20 is its value, $18 to $20, and people are willing to pay $33.25. Why? That's insurance to me as the dealer, is the person who has to make that market and sell that to you. I need a cushion or else the deal's off, right? Here's where the premium is. It's in the call, right? For every call, it's a put. For every put, it's a call. So put these together and that, and you should come up with this. So that's the theory. Everything above that turns into premium. All right, let's get to what you guys are talking about. Newmont Mining, one of my favorites, but I got to go to the person who was in front of you, CLMT. So we're going to go to CLMT. Well, maybe. Come on, machine. Be my friend. CLMT. Helmet Specialty Products.com stock. Not sure what they do, but okay. Wow. Whatever they do, they kind of like following the market, right? Wow. Specialty products. Again, not really sure what they do, but nice range today. So again, I normally would at least do the daily. Stock is still basically in an uptrend, and you can draw a trend line from there to there to there, and you can see if it breaks that, then likely the trend is done. That would be my first very, very simple thing that you could do. You put it there and we run it right to there. And you can see where it comes down, 15, below 1560. So if it comes down and breaks that, which is like 15 basically right now, but as the stock would move out, so does the line. The channel goes up. So that's what the stock has to do to stay above it, to keep the uptrend, if indeed we want to consider this an uptrend, in line. Now, basic. This to me looks like it was 5 waves down. 5 waves down is usually 3 waves up, and then it's followed by another 5 waves down. So unless this high can be taken out at 2054, I would call this an A and this the B. And we've started a C wave down. They're reacting today because the whole markets have turned. The Dow's up 300, the S&P's up 56, the Nasdaq's up 270. Even the Russell turned itself around and is up 26. Now, let's just take a peek. I'm just going to look to see if they have options. They do. I don't know how. They don't necessarily trade, but we got a big open interest at 20, basically worthless. So that's been building. I'm surprised I don't sell it. And there's nothing happening. So here in this particular stock, the options really won't have any control. They won't have any control. In fact, people are probably going like they're hitting that bid just to get out. So it would have to move really a lot to even get up in the money anywhere. 17s, basically, nothing trading. Nobody cares. And look at the bid. You can drive your Mack truck through those. So in this particular stock, there's no threat from the options trading that's going to have a control. So it falls into what the balance of the market is doing. And right now, they've turned it in a rally, and that's what's going to happen. Now, what do I think may or may not happen tomorrow? I can take it down to the hourly chart. That's pretty decent, actually. But from here, A, B, C. So it looks like, again, a little correction. What will kill the deal is if it breaks above 1852. But as you can see, they just dropped it from 1805 to 1772. So that might have been it. Now the sellers are back. So again, just using that daily chart, if you're long the stock, I think we go down. I think we put in another 5 coming off of this level. And you can run some fibs, and we would use the extensions, because if this is A and this is B, I want to see what the C is going to look like, and it's going to be related to the A wave, if indeed this is what it is, if it is what it is. So I'm just using basic fibs here. So what we got is you'd be looking for 100% is 1225, and that's definitely below there just, but it could be enough. So that's what the wave pattern's kind of telling me, and the Fibonacci numbers are telling me. Here are your support levels coming off. Right? See that one? 618 keeps it above the uptrend line. Could be a positive for this. But again, I'm looking at it probably wanting to come down through that and end up down here. And then here's your continued fibs. And yes, that is real. If this turns into a severe market rout, like they're just like everybody gets out, bad news, et cetera, then these extreme levels come into play. And as a C wave, one thing I'd be looking for, C is equal to the A wave, and that would be right here. Your next most common is C is equal to 1.618 times the length of wave A, and that's all the way down here. So again, depending on how you feel about the global economies and our economy and our situation, are we waiting for the next shoe to drop, or is it all just going to be band-aided over? And in which case we maybe will rally for a while. I don't make those decisions, the market does. But right now, the market's telling me, yeah, we're going up right now, and we probably will go up again tomorrow. And then once we're done with all that gamma that we got to deal with between today and tomorrow, then maybe we'll renew the picture and we'll dump everything on Monday. Maybe. Just saying. All right. Moving right along. Next up, Newmont Mining. Oh, I love Newmont Mining. It's always been one of my favorite companies, basically because I love gold. Wow. Now that was a big deal right there. Hit 60 and died. So I've already run some fibs for this. Oh, wow, look at this pattern. Again, I'm on the daily chart. 1, 2, and then we do an internal. Right? That's a 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5. It's done 5 waves down from there, signaling the downtrend has resumed, right? Going from this whole thing. And if I had to, I'm just going to go up one more to my weekly chart. Yeah. A, B, C. Not looking pretty. Not looking pretty for this market. What does that suggest? We're bouncing off of 382 support, but this is 5 down. We should get 3 up. So you stand a fairly strong chance. And I'm just going to double up on this fibs. Okay. I'm going to use retracements now because I want to figure out what are the limitations for this outside of our moving averages, which right now it's kind of gotten up to just below the 50. And that sits at 46.58 and it turned lower again. And why? Because they turned on gold. So right now, it should put in an ABC. Let's take a look at what those retracements are going to look like. And we're just going to go to the bottom from the top. And we got a double right there at 48.71. We got our first one, which is 236, which in my book for a B wave would be absolute minimum, absolute. And if it stops there and really goes down and starts to break below to a new low, there's a lot of weakness in the market, in this market, in this stock, that they're now very worried about their positions and they're dumping. So it coincides right there with that 41.35 level, 41.80 to 35 right in there. And then your next stop, if it is done, right? If I'm looking for just a normal B wave, you're looking at 48.71 to 50, somewhere in there. Nice, but it should come up in A, B, C. End up back there, and then put another 5 waves down. So no matter, and then once you have the top of that B wave in, then you're going to be able to put in additional fibs, which are going to show you some other things. Like what we had was we were looking at just the straight fibs for the B wave. Once you have the top of that B wave, you now can put in extensions for the C wave. And you can see, now if that's what it is, you're going to see where they start to overlap. But if you're thinking it could get up to there, let's just put, for the sake of this argument, I'm going to use the current high, right? That's where it is right now. And if that was it, and we start to really head lower in the stock, then I need to move this up and then bring it back into picture so I can see it. You've got a C wave. It's going to be compared to the A wave, and your 100% is at 27.81. 27.81. And your max is just even off the screens here. I would hope that it doesn't get down there, but 100% for sure. So what's that tell us? Trouble. If this really starts to break down and Elliott and Fibonacci have anything to say, the stock's going to take a tumble. And we can go back out to that weekly and see it. And I can go back out to the monthly and see it even more clear. It's not spelling total doom. We've been at 14. When were we at 14? In 2015. And granted, it was 8 years ago, but it's been there. We've had tremendous rallies in between. What is the prognosis for gold? I think gold over the long term will, for sure, I believe, I don't want to say, I shouldn't use that word for sure, but I truly believe that gold will go above beyond 2000. And Newmont being a major miner, a major mining company for gold. And I believe I don't know if the deal went through. I believe it was Newmont was looking to pick up somebody that is copper and copper mining, which would add very nicely to the portfolio. But I don't know if that deal went through. I don't follow it that closely anymore. But even on my monthly max, you can see it has total space to come down to here. And that's not necessarily, that's only to that low. I mean, you got price support here, 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 and here. And if it came down to there, the uptrend remains in place. If not, then we really are going to sink back down to here, which just takes us back down to those lows, which are 2015 lows. And I would suspect that gold does a dump as well. So we shall see. Anybody else got anything else? Otherwise, I think I might go over and just give you guys a little bit of a look at my personal pal. Yeah, most days. I shouldn't say it like that. Okay. Intel. Oh, you're taking me back in time, my friend. Intel, I was a market maker on the Pacific Coast Exchange for many years, and Intel was one of our bigger stocks. Let's bring it down to the daily. Wow. Beautiful rally, but because it's in all the indexes, it gets to participate. But see this whole thing off of that low? A, B, I'm going to give that a C. It's an X. It's doing a double ABC. It's going to do this sideways movement for a while. That's what it appears to me on the daily. So if we look at the Elliott, and again, I don't have a count, but that is the October lows. So if it's doing pretty much what the NASDAQ itself is doing, the NASDAQ is also moving through, and I'll show you real quick. The NASDAQ is also moving through an extended corrective process. Here are the October lows. So you can see we got the A, B, C. Now I've got this label, but Intel is not doing the same thing. But so Intel is going to have to follow through to this, and it's not going to end well. Let me say that. This is all being corrective. Now, if I have to take it from, is that going to be a correct high? Let me go out to this. Yeah, for right now, it certainly will be. So I'm going to just put in some fibs so we can get an idea. Oh, that one almost came down and took that low out. Those are September of 22 lows. That's the one I'm going to use because it's still valid. These are just straight fibs. So can you see the weakness in the stock? I'm just on a weekly. Here it's done. Actually, this is a tougher one. 1, 2, 1, 2, 3, 4, 5, a 3. This is a 4. Oh, they're not even ready. This is just a fourth wave, and I'm looking at a weekly chart. What follows a 4 is a 5. So that changes. It changes my look. Let me undo that and put something else in. If indeed, this could have been the 5. 2459. 2459. It's a real push. Let me go down to here and go to a line chart. It did. It did. Intel could be in a lot better shape than what I thought. All right, so let me go back over here. If, now this is a big if, because I can't tell. If indeed from that high to this low completed 5 down, right? Remember how I was counting it? 1, 2, 3. That could be 4, and this is the 5. Very well could be. And the way that this launch is happening, that's also pretty tight. So now let me go back again. And let me put some different, the same using retracements. But here we got and connected to there, and we still got 35 to 41 for a bounce. Again, not understanding what this is in terms of an Elliott count, but just in terms of 5 waves down, followed by 3 up. You got 35.06 to 41.45, and that is if this count is right. If it's not, then what you're going to have is a very strong turn lower, and then we're looking at something different. We are looking at this. I have to put it there because I was using before, but I will put it here, and let's go to here, this high. You're looking for a major, let me drop it so I can get down there without disrupting the chart. Wow. I doubt it's going to go that far. That's Intel out of business. But I for sure would be looking at 5 waves down. So I don't know. I'm going to go with the other one, to be honest with you, because I think Intel is too big of a company. You want XLF? Okay. I think stranger things have happened, but what that was suggesting that Intel's going to go out of business, and I don't see that. They're too big. Their products do sell, et cetera, et cetera, et cetera. So I'm going to go with that. What it is starting in a new that ended it, and it's in a little bit larger correction. So just before I go to that additional, I'm going to go back over to here because I want to show you one more time. And we're going to go all the way over to here. And we got 31.29. We've got the 200. This is only just the daily. The 200 EMA and SMA both together with that resistance at 57. So right at, we have resistance at 29. Then we have the 200s at 57. It might be a little tough. It'll bounce around there. But once it can break through, then you cleared the path to get up to 35, 34. Then we have 60, 38, 68, 41. And you can see all of your moving averages are behind you. Moving averages are looking pretty good right now. Last barrier is right there. And then it should be free sailing to start attacking all of this. So I guess you could say on that basis, the prognosis for Intel is more a little bit on the positive side. But let's see what they do up here, because maybe this is ABC, A, B, C, and then we're doing an X, and we do another ABC. You don't know. It's just too hard to tell right now. And everything is doubling up on corrections. You know, instead of just being a single ABC, they're doubling. So again, okay, let's go to XLF. And that likely would be the last one because my time goes so fast in these things. I enjoy them. I try to really speed myself up, but we got the financials. Yeah, it's a bounce. I'm going to tell you right off the bat, it's a bounce. Let me go up to that weekly again so we can see what we got going on. 1, 2, 3, 4, 5. Ooh. And for all I know, ABC. And this is 1. Oh, my Lord. Thank you for bringing this one up. Whoever put this in, thank you very much. This, I have not really been paying attention to, but if I had to look at it, folks, again, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. That's the first 5 down in the banking sector. Ouch. What comes down after 5? We do a 3-wave rally labeled ABC. ABC. We just came down and basically, I don't know if we did. Let me get over to a line chart. Line chart is on a closing basis. Nope, we did not. There's still some life left, possibly. This is the weekly chart. I'm going to pull back to that daily chart. So again, wow. Let me go back out to the weekly because I can show you what I'm looking at. What we're going to do is we want to come down off of this high, and I want to now use extensions, because what am I going to compare? If that's the first wave, this is the recovery. I'm looking for the next wave down, and I don't think it's going to be pretty, but I want to tell you what we're seeing in the banking sector, folks. Please take it seriously. You're going to get all sorts of stories. The government and the agencies, their goal is to stop any possible panic or run on banks. That's their job. So they're going to tell you everything's okay. They're going to tell you we're in there looking, we got it all taken care of. But we don't know what's going to happen in a month or 2 months or 3 months. If this really does roll out and just continue, and we see another one drop and another one drop and another one drop, and then finally we get somebody bigger than Silicon Valley Bank giving up the ghost. If that's the case, you see that? It's going to be child's play to what I'm looking at. So again, if we had to compare this, what should be a C wave, at least, to this A wave, so we're comparing a 5-wave decline next to a 5-wave decline. Basically, this wave would equal the length of that wave at 25. If it's as serious as I think it's going to be, then I'd be looking for 1.618. I'd be looking for this C wave or this leg. If this is a 1 and this is a 2, the third wave, again, being the longest and the strongest, would be expected to come in at almost 1.618 times the length of that first wave. That puts us down here. You're going to say, is that possible? We're being told that our big banks, they're solvent. They're okay. Everybody's built up. It's like, you're right. They are, but they're not stepping in to go buy the assets of Silicon Valley Bank with all the money that they have. Nobody is stepping up to the plate to buy it. Nobody was willing to step up to the plate to Credit Suisse. It defaulted back to their own central bank, which that should be part of their job, right? So, fasten your seatbelts, folks. It is going to be a very, very bumpy ride. You're very welcome. It's going to be a very, very bumpy ride here. And I guess just to encapsulate everything I've said, what we're seeing happen, again, has nothing to do with fundamentals. Partially, yes, but why this strong rally today has everything to do with the derivatives and tomorrow's expiration. So therefore, I leave the statement with you. The markets are no longer directionally controlled by fundamentals or even the technicals. They are directionally being controlled right now by the derivatives that are underneath all of it and where the volumes are greater. And let me leave it this way. With all the options, puts and calls that traded, we put all those volumes together and they all exercised or got assigned and had to go to the window. Like, okay, give me my money, there's not enough. Derivatives outnumber dollar-wise than everything else. That's how quickly and how massively it's grown. I'm going to leave it right there. David, I turn it back over to you and thank you so much.